latest data from the previous month. And September brought opportunities as well as some disappointments, but we're still in a solid market compared to some places. So let's get with it. The market snapshot for San Antonio is operating in what we call a balanced market still. That seems to be the term of the year, balanced market. So what is that? We're at 5.9 months of inventory, which is truly a balanced market. And that means there's opportunities for buyers and sellers. Of course, each neighborhood, as you know, is very personalized to the zip code and the neighborhood of where you're at in San Antonio, because some have more supply, some have a little less. And we're seeing shifts in the areas as inventory grows. And I think that's what's really important. Here are the standout numbers for September. Total sales were up 5% year over year. That's a solid momentum, but of course that's mostly new homes. Average sales price was $369,836, up 1%, showing the resilience in pricing. And again, I'll go back to that's mostly new homes. Median sales price is $308,995, and that's holding steady with no change from a year ago to today. Days on market are up 11%. That gives us more time to market homes strategically and hopefully get them sold sooner. 78 days is that average. Price per square foot is coming down again, $174, and that's staying pretty consistent at this time. Here's where the big change is, and this goes back to resale. Closed to original list price ratio is 92.1%. That is 7.9% from list price to sold price once you get the list price right. And that's a lot of money off is what that means. So that's something that you need to plan for and price your home right. You'll be able to take less than that off. New listings are 4,019, down 5%. Fresh inventory is still coming on, but at a slower pace. Active listings, 16,579. That's 13% more for buyers to choose from right now. Average rental price actually is $1,825, still holding pretty steady in the market. But again, that's going to be based on areas. Some places have just as many rentals for sale. What does this all mean for sellers? Well, you better have a strategy. Yes. And you better make sure you win the beauty contest and buyers can't pick on you. With more active listings, you got to really shine or you're going to sit. That means you got to listen to great advice and pick the right agent. And you better look good online. Never seems to amaze me how bad some people's photos are. The silver lining of this current market is it's a great time to sell if you do it right. And it is a fantastic time to buy. So it's really important that you know how to put the two together to make the max that you can for demand with those buyers. What does it mean for the buyers? Buyers, good news for you is with inventory climbing, as we said before, options are expanding. You're going to give us the tips on rates, and it's allowing you to negotiate for the first time in many years your closing costs and other items. At this moment, it's time to explore and see the right fit for your family. You might even want to check out new homes. But that being said, don't get complacent. Move quickly on well-priced homes in desirable neighborhoods because they will sell. Don't think they'll be there next month. Get pre-approved. Yes, and that's where Jen comes in. Be ready to act when you find the property. It's important to know your threshold, just like the seller knows theirs. New construction, lots and lots of opportunities in that builder arena. They definitely have supply on the ground right now. Interest rates with some of them are as low as 3.9, which on resale market, we can use Jen as a seller to buy down the interest rate for these buyers. And there are some other opportunities. but new definitely has some ability to get you in if you could never buy otherwise. If you're comparing new construction versus resale, better to know who the builder is you're buying from and what are the significant differences. A lot of them have teaser rates, and that's not what you end up with. So that's wrapping up the market update. Whether you're buying or selling or just keeping your finger on the pulse of San Antonio real estate, knowledge is power, and that's what we try to arm you with. A balanced market with solid sales activity and reasonable inventory is an opportunity for everyone. You just have to plan correctly. Today's decisions are important to make the right choice with the right agent. And we offer personalized service from value estimates to helping you shop for a home. And with that, I'm going to let Jen give you the update of the market for what the lending is doing. Some positive news. I know I got your update Monday, I think, and rates were down just a little.
Yeah,
just a little. But we'll take just a little for right now. So with that, I'll let Jen take off.
Thank you. Hi, I'm Jen Maley with Legacy Mutual Mortgage. Love working with the MStagersRealtyPartners team. And here's your rate update. So right now, conventional's right around 6.35, and government loans like FHA and VA are sitting at around 6.05.
Whoop, whoop.
I know, good news.
Better than 6.8.
Yes, exactly. It's a nice improvement. And the Fed futures are forecasting a 90% chance of a 0.25% rate cut on October 29th and a 75% chance shorter percent on December 10th. So, of course, those numbers can change based on the labor and inflation data reports that come out before that. But that's the expectation. And those rates are already built in, so we have them now. Just remember that. And with the government shutdown, not all of the economic reports that affect rates are coming out. So we're kind of just waiting to see what happens. Here's the tentative schedule of reports that are coming out this week, because remember, every week reports come out that affect rates. But for this week, Wednesday, we have mortgage applications and the CPI, which is the Consumer Price Index. Thursday, we have the PPI, the Producer Price Index, and retail sales. Friday, we have housing starts and permits. And these reports just help the mortgage-backed security market determine what they're doing with rates each day. So they kind of fluctuate up and down throughout the week typically. And I have received a lot of questions about whether the government shutdown will affect government loans like FHA, VA, and USDA.
Good question.
It's a good question. And the answer is it depends on the client situation. Some clients, it will affect them, others won't. Like if we need to get tax returns from the IRS, there's probably going to be a slowdown. If they work for the government and they're furloughed, that could put a pause on the whole thing because they don't have to talk. All right, they don't have income. Yeah. Or some other potential scenarios, like if you're in a flood zone and we need national flood insurance. So there are a few factors, but I'd say for most clients, they're not affected. Most of our government loan clients are not being affected at all. So that's the good news. But we are looking carefully at each client's individual situation, and we'll let everyone know if we do see a potential delay. So thank you so much for tuning in to our update.
I'm Missy Stagers with MStagersRealtyPartners.
Jen Bailey
with Legacy Mutual Mortgage.
Legacy Mutual Mortgage.
And we are so happy to have had you for a few minutes of your time to give you this market update.